National shares surging today. There seems to be some relief that that parcel of shares offloaded by the government didn't sell for less.
You see such a large stake being sold by one shareholder. It puts downward pressure on the shares, but it looks like these shares weren't sold just to the market. $1.5 billion worth of shares being sold, and the majority of that going to as a buyback. So the company actually buying back those shares, and they'll be cancelling those shares as long as shareholder approval on the 21st of November goes through. So all up, this move is earnings per share accretive. Now, if we have a look at QR National, back in August when they released their full-year result, they did announce a 10% share buyback, which at the time was about an $850 million buyback. The fact that they're now looking at buying back $1 billion worth of shares through the Queensland government's offloading its stake means that this buyback has been upgraded from $850 million to probably $1.05 billion because of the $50 million that's already been bought on market as well. So good news for QR National shareholders. The other $500 million does look like it's been a private placement to institutional shareholders. But as I mentioned, usually when you do see such a big stake, $1.5 billion or around about 15, just over 15% worth of stock being offloaded, then you do see some downward pressure on the share price. But in this particular case, we've seen QR National looking to step up to the plate to take that allocation and use it to cancel out shares and really increase the size of the pie that each shareholder owns.
We had that ANZ job reads out today, and it looks like our market's softening while the US is finally seeing some strengthening.
And I think that's the key reason behind the gold move as well. Quantitative easing is a key reason why gold has been going up. And over in the US, we saw better than expected job numbers. So that reduces the probability that we will see an aggressive program by the US Federal Reserve. So that put a bit of downward pressure in terms of the gold price. And in fact, we saw the US dollar strengthening and the Aussie dollar weakening off. So all up, I guess it was positive news for the US economy, but not so good for the gold price or the Aussie dollar. Here domestically, we've had a read on our jobs market as well, and the ANZ job numbers out, and this is before the official numbers on Thursday, where we will get the official Australian job numbers out for September. We did see the sixth consecutive month of declines in this area, so down by 2.8% in the total number of job ads. If we have a look at where these job losses mainly came from, it was from the public sector as well as the mining space. WA and Queensland were hard hit in terms of job ads, and we saw internet jobs down by 2.7%, newspaper jobs falling more severely, down by 3.6%. On Thursday, we'll get the official numbers, and the consensus is for 5,000 jobs to have been created in September, but expecting that unemployment rate to tick up. It's been fairly low at 5.1%, and the market's expecting it to tick up to 5.3%. So this is the biggest release for the domestic market this week. So hopefully we will see a stronger read on the jobs market, but the ANZ job ad numbers, which are a leading indicator, really indicating some softness in terms of the market. But in terms of the Aussie dollar, a bit of a weakening off, especially given the strong US numbers coming through, and I guess a pretty quiet day given that Japan was on holidays today.